I have John Seguin here on the webinar with us. John, you there?
I'm here.
Okay, great. John had a busy December, actually got featured on CNBC 2 times. We're going to go over some of his charts, some of his calls that he made, one particularly on gold, which was actually pretty nice, looking very strong as where it stands today. But first, we're going to go over the disclaimers. Obviously, this is a webinar. This is not a solicitation to buy or sell securities or futures contracts. Although we do have great advisors with us, everything that you'll see here does carry risk. Here's our trading disclaimer. Hypothetical performance results do have inherent limitations, some of which you can see below. And of course, past performance is not necessarily an indicator of future results. We're going to talk about really who we are and what's new and coming for 2012. Quite a few things have happened, and what we are and what we specialize in is developing automated trading systems. We lease these programs to not only individual investors but also to family wealth offices, brokerage firms, institutional groups, because everyone's looking for an edge. And we're generally going to trade spreads. Most of our programs can do very well whether the market moves up or down. And that's what's really great about day trading and swing trading and things like that, rather than just being in long-only type of investments like mutual funds and things like that, because we're very nimble. We get in and out very quickly. But what else is new, which I'm really excited, and John's here to talk to you about, is the macro graphs. You're going to see some short clips in a moment regarding macro graphs and how they work, but this is going to essentially teach you how to become a better trader, hands down. I had a little bit of experience when I learned this. I've only been doing this for about 8 years now, and I have become an exponentially better trader just by looking at this charts and reading at what John has to say on his Monday morning podcast. Essentially we're going to be incorporating that into our business plan as well, and also by his charts that he writes up on. So you guys are going to be really impressed with this. You're actually going to all get a 2-week free trial starting on Monday morning for access to his charts. He writes on most markets, and if you have any custom requests, he's going to give you instructions on essentially how to get those. But we will be emailing you starting Monday his macro graph charts. Also, I touched on it before, our Power podcast, our Power Week podcast. It's essentially going to be starting Monday morning. And what we're going to be doing is giving you a briefing on what the market's doing. And John, why don't you talk a little bit about what you're going to cover during your podcast on a weekly basis for customers to look forward to for the week ahead?
Well, I'm going to treat it very much like a morning meeting. For many of the institutions I worked with, we had meetings every morning before the markets open. We'll talk about upcoming events, what's going to affect each market. We'll probably go into each sector of the market: treasuries, equities, metals, energies, maybe even grains, depending on what the people want. But we're just going to sort of review it, maybe look at a few or talk about a few charts and what patterns may be forming for us, and maybe look for some good levels. We'll talk about some levels that might be good bets for the week. If you get to these levels, you do the trades. If you don't, you don't do the trades. We're simply going to work off of really recognizable patterns and any economic events or fundamental reports that might affect those markets.
And Vertex is obviously John's forte. This is his acronym that he's created and how he builds his trading career off of it. So, John, why don't you talk a little bit about the Vertex, what it means and what it means to customers?
Well, for years working with clients, institutional clients, I got asked many questions while I was on the trading floor. And so what I did was I broke down the questions into basically 6 elements, and came up with the acronym Vertex that covers all the questions traders would ask. So let's just go over it. Value means where do buyers and sellers come together most often? If I know what a fair price is in any given time frame, whether it be a day, week, month, quarter, I'll also be able to recognize who's controlling momentums. Momentum or energy is simply the movement away from fair value. So it's important. My charts, the macro graphs, help me with those 2 elements right there. The other, risk. Once I'm in a trade, what's my risk point? Where am I wrong? Another question I got asked all the time is: should I be is this market likely to trend, or ripe to trend, or ready to coil? Should I be in counter trade mode, or should I get in a position that I might want to hold for 2, 3, 4 days, maybe even longer? What's a good spot to get in? Where do I buy? Where do I sell? Support resistance levels. Those are also illustrated in the charts. And where do I get out? The exit points. How far is this market going to move once I get in? And how do I protect that profit once I'm in it? Once I'm in a good trade. So my system and way of looking at markets, I simply look at each one of those elements before I recommend any sort of a strategy or trade. And if I can cover those, I feel pretty good about what I'm doing.
Great.
And really should find a profitable trades.
Great, and I think that's a lot of the components, obviously, that we built with the Vertex program. We were working on that.
That's exactly what we did, Sean.
Yeah, and I mean, as far as maybe you want to take this, John. As far as automated trading programs, how they work. One thing I would say is a lot of people always wonder, well, how long has the program been trading, etc. We always get that when we talk to people, and as everyone does, they're curious to know how long programs have been trading. But there's really more to it. There's a root to it, and that's what I want you to talk about. I mean, Vertex essentially is a great program, but you've been using this strategy for 20 some odd years. So why don't you really talk about how a program comes about from coming from a trader to getting then coded and automated and then getting released finally to the retail public?
Well, first of all, I think back in the 80s when I started dealing with customers, I would call my best customers when I saw something or a pattern that I recognized, or if I saw some activity on the floor. When the capital flows were high, I could tell when all the big firms were coming in. And the idea was to recognize that and pass that information along. That was our job on the trading floor. Well, I also was able to sort of mark that stuff on charts and say, okay, this is when Goldman, Merrill Lynch, and J.P. Morgan and all these guys came in. This is what it looks like on a chart. And for 20 years, I was doing this. So I began to recognize certain patterns that repeated, and not just by the day, but by weeks and even months. So that was really the genesis of Vertex, of the Vertex training system. That, there's about 3 or 4 patterns that I really see that pay off 7, 8 times out of 10. So, but the problem was a lack of technology and well, certainly by me, but after being introduced to the technology where you can actually code or program ideas to recognize the patterns that you've seen over the years, that's really sort of changed things for me. And that's why I built the system. What it does do, it allows me to let one system run and allows me to go and look and research other markets. So if I'm an S&P or a treasury trader and I have a system, those are the ones I'm most familiar with, those can trade on their own simply by the patterns that I've made in Vertex for the code to recognize. And they're very short-term trades too.
And I think the human intervention is a big part too. I mean, it's all done automatically.
Sean, it does. Sean, it takes a lot of emotion out of the trading too. I mean, often I would have good trades on, and sitting in front of a screen, a minute seems to go by like an hour. So I think that's also helped with some discipline too. I mean, there's a discipline problem when you're sitting in front of a screen all day. Emotions can get to you. The nice thing about these systems is that they automatically recognize the patterns, enter the trades, set your stops, and your profit projections.
Yeah.
This allows me a lot of freedom if I want to trade more markets or if I want to play golf.
Yeah, and the fact is that your funds are under your own control. I mean, you're able to see what's going on in your account. There's a lot of transparency. And one of the things that I talk about with a lot of people is why the markets, why the program should matter to, a retail investor. A lot of people invest in the traditional stocks and bonds, and they make that up in their portfolio, and they think that that's really the majority of what's out there. And really, there is a lot of different types of investments that savvy investors do find and do very well with. Now, markets are trading around the clock, and that's kind of like what we're talking about in our bullet points here. There's opportunities all the time. I mean, there's some people that trade Forex at 11 o'clock at night, so you have the ability to trade pretty much at all hours of the day now with a computer. And what we do is with these systems, they're just constantly looking for those opportunities to set up to trade the next day. And John talked about it a little bit before. We as investors, we do struggle with risk and fear and greed and emotions. And when you automate it, it does have a certain discipline that's in there where you are essentially looking for certain profit targets and certain stop losses. I think, John, also in your class that you teach, you even tell people to look for 2 profit targets and 2 stop losses and make sure you know exactly what you're risking on every trade and what you're looking to make on every trade. And I think a lot of investors, they don't really abide by those rules. A lot of investors just buy things because they heard it on the tube or because they read an article about it being a good stock, or they may just like the stock and they buy it for no other apparent reason. So that's one thing, is that systems will generally outperform that type of buy and hold strategy in the long run. And that's what every investor should really know. There's a lot of unique ideas out there, and what we do is we have not only John but other individual traders that we work together, and we all work together and put these strategies out there for regular investors to look at. And here's the Vertex RXT program. We're essentially looking at this where this is something that has nearly only a $20,000 minimum investment, but it's got plenty of room to put additional capital. We're not going to fill this program up, within 3-5 months, depending on how fast we market it and how many different channels we use. But it's a type of program that it trades 5 to 10 times a month. It's not that program that trades every single day and looks for something every day, because frankly, there's not an opportunity every single day. And John, as far as the strategy, the approach, it kind of goes back to what you follow with your own discretionary trading as far as following the Vertex acronym, looking for momentum. And I think we're going to cover that when we show that gold piece that you just did, as far as finding momentum and where trades are coiling and where markets are coiling and then where they're running. So I guess I'll just show the results here to the program. This is the return that you've seen. It goes all the way back to January of 08. And I mean, you've clipped over 150% return with this program, in comparison, obviously, to the S&P, which has barely done anything. So what I'm going to do is I'm going to take a short break from my screen. And John, I'm going to give you the panels. You want to pull up that gold chart, or should I?
Yes. Sure, I'll do it.
While we're doing that, while you're pulling up your chart, I'm just going to play this video so everyone can see it.
John Siegman's my guest from Macrograph.com, the most creative chartist I've ever come upon. Once again, we're going to look at these special charts that show us basically bell distributions of prices. So the widest price is the most volume at a certain price. And notice how this is a gold futures by year. Every year builds a high volume price, and we seem to build on it. But as you look at this year with a huge range from 1930 to 1340, I don't see one high price coming out of this bell curve. John Siegman, what can you tell us?
Well, first of all, this is probably twice our normal average year lengthwise. And if you notice that these bell curves, the width of these things, that the markets usually establish a fair price at some point during the year. We haven't done that this year. So I believe that tells us that coming in 2012, that the probabilities are going to favor a coiling market where you get 2 and 3 day trends, and the market reverses. You're going to
now let's go by quarter.
Yeah, agility is going to be key next year, Rick.
Okay. Okay, now quarter, what do we see?
Okay, now you got the same thing. I think it's important to note that these high volume prices that you see, how often they supply support or resistance. Well, they'll have resistance like up in here. But I think it's important to note that all these times you closed above the fair price of the quarter since 2008. And finally, here we are this year, and we're below the fair price this quarter. So what I'm looking for, so if someone gets around 1650 again, we're probably going to find some good resistance. And I don't really have a high volume price until we're somewhere in the low 15 handle. So that would be the area for the next quarter? I expect
So
the
if,
market.
if I'm an investor that's looking to buy in on gold with this wide 2011 range, what's the most comfortable area of support, whether we get there or not, it's another issue, that you would establish a buy?
I think in around 1550, 1540, I'd give it a shot.
So right around the lows of these distributions and right around the top of the
Yeah,
distribution
you see
for
this high volume area right in here. When you revisit those, you tend to get reversals.
Excellent. Johnny Seguin, thank you as always. Next week we'll pick another commodity. Back to you.
All right, thanks so much, Rick Santelli.
All right, so John, you just you about what 10 points away from calling the bottom.
That was worth. That call right there was worth about 8 or 9 grand already. Gold was at 16. That was on a one lot.
Yeah,
One lot.
that was pretty impressive. All right, what I'm going to do now is I'm going to give you the panel.
Okay, go ahead.
So you should have the keyboard and mouse right now.
I do.
All right, and I'm going to change, give you the percenter. Here we go.
Oh, there we go. I got it. All right, you guys see my screen?
Yes, sir.
Okay. All I did here was sort of narrow down that chart I was showing you before with Rick, and this is gold by quarter again. And what you're looking at here, you can see we're 2011, the second quarter of 2011, right there. Okay, but when I was talking to Rick, we were up into this just into the fourth quarter. Anything you see here below this red line is what happened after I talked to Rick. And if you remember, I said around 1550, 1540, we should be looking for a reversal in the market, and that's exactly what it did. It got down there. And actually, I believe I said 1640 or 1650 is where we would look for some resistance, and it's about $25 away from there. So my point is that it wasn't anything magical. I don't know anything about gold, but I do know something about when markets revisit high volume prices. And when you see back here the second quarter, very high volume price, and even in the third quarter, where buyers were very active, I figured, when you come back to these types of levels, you look for reversals. And then that's when I turn on Vertex, and the idea of Vertex, if I get a long-term picture that tells me look for support here, look for a reversal in the market, then I look to my short-term signals that are designed in Vertex, and if I get confirmation from them, I go with the trade. So it's really just taking a long-term outlook and letting a very short-term tool confirm or negate any trade I might want to do or any direction I want to play. So that's pretty much it.
Yeah, very interesting. Very interesting.
All right, now I'm going to give you back the screen, right?
Yes.
Sorry about that, Sean. Let's see how we do this. Stop showing my screen. There we go.
I just got it back, so
Cool. You're on.
here we go.
Back to you, Chief.
Yeah, we're back to the show. All right, so here's the Vertex again, showing the program. Here we go. And here's another program we also work with that John worked closely with this trader. This is called the SPUD program, and it's actually quite interesting because it trades a spread between the S&P and the Dow. We've just about filled up this program, so there's really not. I think there's maybe 1.5 million left to be able to put because it's not very scalable. So we're not really pushing this for 2012 too much because the scalability is so small, and we've really put a lot of people into this. So we're about full with this. But just to kind of touch on for anybody who is on the border or on the fence and getting ready to come on board with this program. Very unique because of the fact that it is in the market only 2 hours a day. It's trading the S&P versus the Dow, and it uses a pretty unique strategy that tries to play those two major markets against each other. We really like where it's at. It's been a very good performer, and the trader who's been using this has also used this for a number of different years. So you see the results here. Very, very strong. It had a very, very nice 2008 as well. And again, what's constant is the S&P. Really hasn't done much. I mean, the S&P has just not done much in the last 5 years or so, even if you're looking back 10 years. So you've got to look at your overall portfolio and say, is there any other types of, things that I can do to invest in this market? Here's our contact information as far as who we are. We're very brief and to the point on what we do, and I'm just kind of going to follow up couple last words for everybody before we go into what we're going to give you as far as with the trial and etc. Trading systems, we firmly believe, should be added to most portfolios because most investors right now, they don't have a whole lot of time. They don't have time to sit there and do their own trading. And this is ideal for you if you're running a business or if you just find that you don't have the time necessary to trade, or you're looking for really an opportunity to make money when the markets really move up or down instead of just being a one-trick pony. And I say that with all due respect. I've got lots of friends that are in the brokerage business and essentially that work for these large firms. Can't name any names, but the fact is most of them are either long or in cash, and they can't really do anything for you when the markets go down. And I think that's where someone like John or any of our other traders or even myself, our knowledge comes into play where we're getting you access to systems that are not going to take up any of your time, are not going to take up essentially a lot of capital to trade. You don't need hundreds of thousands of dollars to do this. You start with something that's comfortable for you. Now that may be $100,000, that may be $250,000, that may only be $20,000. But the key thing is you put one foot in the door, you test out the stuff, and you see how you like it. And if you like trading, if you like doing this, it'd be a nice sidekick to what you're doing already. I know a lot of guys that are on here tonight for the fact is they want to be able to look at the charts and get more access to those charts based off the CNBC clip. John, I'll kind of let you take it away. Why don't you tell them what they're going to get with their 2-week free trial and how they should get access to it, in addition to getting the email that they're going to get from us.
Well, after I'm contacted, Sean, so when they send you an email, I will contact them. I want to find out what markets you trade or markets that interest you. I write very brief daily updates or bulletins, I like to call them, for treasuries, equities, Eurodollars, gold, I'll do gold, oil, net gas, the grains. So you'll get one of those updates or 2 or 3 if you want. And I'll also send you macro graphs of the markets that interest you. We'll do that for 2 weeks free. I'll answer questions you have with them. I'll probably put on a webinar or 2 over that time that explains how to view the charts or how to use them or how I use them. So I'll just get you familiar with how I analyze the markets on a day-to-day basis. If you like to day trade or swing trade, this would be a good thing for you.
John, go ahead.
Go ahead, Sean.
I was going to say, why don't you talk a little bit about, you've been in this business for a long time. Why don't you talk a little bit about how the futures industry has grown and how money is really piling into, managed futures and trading systems as from what you used to see back in the day?
Well, the biggest reason is screen trading. Before, when you had to execute a trade, and believe me, the reason why I got out of the brokerage business was because we really don't need brokers anymore. We used to get paid an awful lot of commission dollars to execute trades on the trading floor. $15 round turns were not uncommon. Now you can do round turns for next to nothing on screens. So the average investor or trader has access to all the markets on earth without having a membership, without having to pay huge fees. And this is simply why it's just available to everybody, where that was never the case back in the 80s and even 90s. So screen trading has changed it drastically. So brokers are obsolete. So all I'm doing is trying to take my talents that I learned dealing with institutions and pass that information along to, anybody that wants it.
And that's why everyone's here tonight. So the fact of the matter is, any questions that you have, contact your representative or email them. And also everybody will be receiving an email with a copy of the webinar as well, in addition to the charts they're going to be receiving on Monday. So John, thanks again. Hope everyone wants to join in on our podcast on Monday morning. We'll be sending you a clip and also a Facebook page and a website to be able to view it and listen to it in case you missed it. It'll also be, you could sync it with your iTunes onto your iPhone. You can listen to it on the way to work. So we really want to go into the education and start teaching people more as far as how to make money in this market, any tips that can help you. And the best thing about it is it's going to be free to everybody who registers for this. So that's what's great about it. And again, thank you everybody for your time tonight.